Astec Life is the stock in focus. Producer of agrochem and pharma intermediaries. Over the long haul, you've seen a phenomenal rise in the stock price. The company recently put out its Q4 numbers. Profits came in at 17 crores versus 3.4 crore rupees. You had the overall top line growth as well come in at a healthy 128 crores. Let's connect with the management to find out the road ahead for the company. Ashok Hiremath is the managing director, Astec Life Sciences, who now joins in on the phone line. Good afternoon. Thanks so much for taking the time out and joining in. It's been a stellar set of numbers for the quarter gone by. Take us through what really have been the highlights in Q4 and what contributed to your strong earnings.
Good afternoon. Q4 typically is a strong quarter for us every year. This quarter was particularly strong, and it was really the result of many things falling into place altogether. There was a huge shortage of products in China this year because of the China blue sky policy. With the result that many customers moved to India and the demand was very strong. We had expanded our capacities in the second half of last year, and therefore we were able to meet this additional demand. And finally, the contract manufacturing business did very well, with the result that our revenues for the quarter were up by 50% almost, and our PBT was up by 160% for the quarter. Backed with that, the overall results for the year, therefore, took a fairly healthy upturn, and our total income went up by 20% to 378 crores, and our PBT went up by 31%.
Now to the overall API demand, can you give us a sense as to what it's like in China versus back home? And do you think that we could see a sustained improvement in demand for API going forward on the back of this?
Yes, certainly. The China clampdown on the environment is not going away. We thought that it was perhaps restricted to the winter season in China, but there are again more and more inspections taking place in different regions, and now the Jiangsu region is going to be under inspection. And when these things happen, the whole state, the whole province, more or less shuts down in terms of production. One by one, we are seeing dislocations all over China. So we see this as a medium-term problem where China is going to be very restricted in terms of being able to produce and deliver. So this is a great opportunity for India, and India is ready to take up the challenge and respond to this.
Mr. Ashok, you've been a long time into this industry. Can you just tell us that most of the large cap Indian pharma companies, generic companies had closed down their API capacity because they were sourcing it from China quite easily, which is not the case anymore?
Yes, the dependence on China has definitely been a problem that took everybody by surprise. I think everybody has gone back to the drawing board and trying to reassess their strategies, and we as Astec have definitely anticipated this a year ago, and we built a plant in Mahad which will be commissioned next month in June, which is essentially a backward integration project which will where we will be making our own intermediates for our production, and the whole idea is to reduce our dependence on China. But yes, all Indian companies are looking to kind of de-risk themselves from China, as our customers in the Western market who are trying to de-risk, and therefore all that business is coming India's way.
Right, Mr. Ashok, thank you so much for taking our time for us and explaining us about the business and what's going on the ground for some of the pharma companies.